Have you ever heard of a lender called MCAP? Well, if you haven't, that's okay because most people haven't. But here's the thing, MCAP is one of the largest non-bank mortgage lenders in Canada. And in many cases, their products are actually better than what you'll get from the big banks. Hey, I'm Jarrett White, a mortgage broker here in BC, and in this video, I'm going to break down exactly what makes MCAP such a strong option. Now, it's their flexible products, how they can help you qualify for more, and why working with a mortgage finance company might actually be one of the smartest moves you can make. So what is MCAP? MCAP is what's called a monoline lender, a mortgage finance company essentially. That means they don't offer checking accounts, savings accounts, credit cards, or car loans. They do one thing and one thing only, and that's mortgages, and they do it very well. And that's not actually a bad thing. For many borrowers, it can actually be a positive. When you get a mortgage with MCAP, you don't need to open a bank account or move your money around. Your payments still come directly out of the exact same bank account that you have right now, just like paying any other bill. So if you bank with TD, RBC, or Scotia, that doesn't change. You just add MCAP as a lender collecting your mortgage payment. Oftentimes, big banks will make you sign up for a checking account with them simply to get their best rates and products. Now, one of the great features is the ValueFlex product with MCAP, and I wanted to touch on that. It's one of their most popular products. This product is designed for people who are very rate sensitive, meaning you want the absolute lowest rate on the market. And while I don't recommend hunting for a rate, if that's you, this could be an option. It's built specifically for insured mortgages, so people putting less than 20% down. And you don't actually have to be a first-time home buyer, but that's typically who it benefits most because they're typically putting less than 20%. The ValueFlex program consists of offering the lowest rates in Canada. It's one of the reasons I recommend MCAP to so many clients who are focused purely on rate. Now, because they're offering some of the best rates, there is one catch. And it's not a huge catch, but it's important that you understand it. If you take a ValueFlex product, you can't actually refinance mid-term to another lender. You can still refinance, but it just has to be with MCAP. If you sold your house, you can go somewhere else, but you just can't refinance to another lender. If you want to go to another lender, you have to wait until renewal. So you're still getting the best of the rates, but you're committing to staying with MCAP for your full term or refinancing with them. For most people, that's a pretty fair trade. If you want full flexibility and you don't want that constraint, MCAP still has a standard product and the rates are still relatively competitive. With these, you can refinance midterm, you can switch lenders later if needed, and you'll still get a fairly transparent payment structure as well. So whether you choose the ValueFlex or a standard mortgage, you're still getting some of the best combinations of rate and flexibility available anywhere in the market. So why is MCAP amazing for people that have overtime income or their income is increasing over time? This is one of my favorite features, and it's something that very few lenders offer. To my knowledge, MCAP is the only one that will do it. MCAP allows brokers like me to use what's called a 24-month rolling average of income. And here's what that means. Most lenders take what's called a 2-year average of your income. So if your 2023 T4 was 80K and your 2024 T4 was 100,000, we would add those together and that would average 90K of income for you to use to qualify for a mortgage. But right now it's late in 2025 and you might be having the best year yet. Maybe your year to date is $120,000. Most lenders won't even count any of that. They'll still just use the 90K. MCAP looks at your actual year to date income, adds it to the previous year, and then fills in the remaining months. And what that does is it creates a true 24-month average of income. That means you might qualify for 110 to 115 compared to 90K, and that difference could increase your borrowing power by $80,000 to $100,000. For some clients, that's the difference between not qualifying at all or buying their first home. Now, this feature has helped so many of my clients finally get into the market, and it's exclusive to lenders like MCAP. Another huge reason why I love MCAP and other mortgage finance companies is they calculate their penalties very fairly. When you break a fixed rate mortgage, every lender charges what's called an interest rate differential penalty, or IRD for short. And here's the difference. The big banks calculate it using the posted rates, which are artificially inflated compared to market rates. So let's say your mortgage is at 4%. but the posted rate at the time of you signing might actually be 5.5%. Now, when they calculate your penalty, they're not using the rate you have, they're using that 5.5% rate, which is artificially inflating the difference of interest, which means you're going to end up paying thousands, if not sometimes tens of thousands of dollars more. MCAP doesn't do that. They use the real market rates and your actual contract rate. And your penalty is based off the actual difference, not fake posted numbers that are inflated. That makes their penalty structure way more transparent and a lot more fair. It's a lot more reasonable, and if you ever have to change mid-term or make a change, you know you're not going to be breaking the bank. So here's the bottom line. If you're someone who wants the lowest rates possible, doesn't want to move your banking around, and has overtime or variable income that's trending upwards, MCAP could be a great solution for you. Their programs like the ValueFlex or the 24-month rolling average have helped so many of my clients qualify for more, save money, and buy the home they thought they couldn't afford. Now, it's very important to know you can't just walk into your branch and apply through MCAP. They don't even have any branches. They work exclusively with mortgage brokers. So if you're curious about whether MCAP might be the right fit for you, click the link below. There will be a link in the description to book a call to have a free mortgage consultation, and we can see if this is the right fit. It costs you nothing, and I'll walk you through a clear plan and see if it fits your goals. If this video has helped you out, please hit that like button, subscribe to the channel, and ring the bell to be notified. I'm going to be posting many more videos like this about other lenders as well, so you have as much info as possible when it comes to choosing a lender for your mortgage. Thanks a lot for watching. Catch you on the next one.